Welcome to the third in the Gas and LNG Insights podcast series, produced by Natural Gas World in partnership with RBAC. RBAC is the market-leading supplier of global and regional gas and LNG market simulation systems. These systems provide industry analysts with powerful tools for supporting investment and M&A strategy, environmental and sustainability goals, credible risk analysis, trading strategy, and policy development and assessment. I'm the podcast host, Joseph Murphy, editor at Natural Gas World. Today, it is great to be joined once more by RBAC's CEO, Dr. Robert Brooks. Dr. Brooks founded RBAC in 1987 based on his experience developing several well-respected predictive models for government and industry. He designed the first gas transportation model while getting his PhD at MIT and has led the industry ever since. Dr. Brooks, turning to Asia for today's discussion. So we saw China once more overtake Japan as the top LNG importer last year. What is the outlook for Chinese and Japanese LNG demand going forward?
Well, thank you, Joseph, for the opportunity to be on this podcast again. And it's a very interesting trend that has occurred recently. And I think we're in for additional surprises, you might say, later on as well. So just as you pointed out, if we look at the chart on the left, this is a simulation that we've created at RBAC using our G2M2 Global Gas and LNG market simulator for natural gas. And you can see the blue line is the former LNG import champion, Japan, the light blue. And you can see in the early years, beginning with 2011, it's by far the largest importer. But you can see in the early 2020s, according to this chart, it gets overtaken by the red line, which represents China. And so you can see China's LNG imports growing steadily and then accelerating in the late 2020s as Japan declines, just as you were saying. But other things are happening in the chart. You notice that other countries' LNG imports are growing very substantially. These are only the Asian countries, but you can see other countries, South Korea, and we have Pakistan and Thailand and so forth are also increasing. And in fact, if you notice another very interesting thing, which is that China peaks out in the early 2030s and then actually comes down a bit. And then in the long run, it gets tied, you might say, as the global LNG import leader by India. So I think that's, kind of unexpected, kind of surprising. But, there's some underlying, structural reasons why this has happened. On the right-hand side, you can see the stack chart of what you see on the left. And you can see that, again, LNG into Asia, rises very high until the early, 2030, a little after 2030. And then it kind of stays more or less constant after that in that particular range. But if you look at the bottom, you can see India consistently growing in the blue at the bottom. China just above it, you can see that it reaches its maximum around 2030 or so, and then comes down a bit, but then is pretty steady after that. So I guess the question would be, what's going on? What's happening in particular? I think, we know, as I think you mentioned, Joseph, that, Japan is expected to continue restarting its nuclear and to be involved more with renewables and nuclear, and perhaps less with LNG imports in the future. But, the growth in China is not unexpected, but the decline later, the sort of peaking, you might wonder why that is, and how the heck does India actually kind of end up tied in the race in the long term. So I think we've got some more information on the next slide that might be helpful on that. So if you look at the left-hand side, you can see this is focused on China, and the right-hand side focused on India. So you can see the blue line is consumption, and you get China consuming way more than India, and reaching a peak, let's say in the 2040s, and kind of being more or less flat, coming down just a little bit after that. But the main thing to notice is the green line. The green line is production in China, and you can see that production is a very substantial part of the source of supply for China. In fact, it's about 60% of its consumption. And then the rest, of course, is coming from LNG, which is the purple line, and then from pipeline gas, which is the red line. So you can see what happens here in the long run. Production stays steady until something a little bit strange happens in the late 40s. Let's not worry about that right now. But you can see that the purple line does just what we saw before. It sort of maxes out in the early 2030s and then comes down a little bit. So what else is happening? Well, production is continuing to rise, but look at that red line. So the red line is pipeline imports, and you can see there's this acceleration that's occurring in the 2030s. And that's an assumption that we have made in this particular forecast, that Russia and China do actually make a deal for this second major large pipeline project called Power of Siberia 2, which could bring as much as 20 billion cubic meters per year of natural gas into the sort of north central China demand area. So that's what we see here. But you see India on the right-hand side is a very different picture. First of all, production is not nearly as strong. It is about 50 or 60% historically of total demand, but it doesn't grow, like production in China does. That's the green line. And then the red line, it doesn't have sources of pipeline imports. In fact, it's negative, which is kind of interesting. Now, why is that? Well, because India actually ends up supplying Bangladesh. So it actually has negative pipeline imports, which means to satisfy its growing consumption, you can see it's growing, pretty fast. It needs LNG. And so that's why the purple line there, representing LNG, continues to grow along with total consumption. So, just looking at these, I think it's very interesting. Of course, there's a lot of speculation about what might happen in the very long term. And we don't know for sure, but it's an interesting trend that I think, we should watch and kind of plan that this is a very possible scenario.
Well, it's interesting. You talk about a second Power of Siberia deal. Putin is in Beijing this week. Who knows whether or not that might yield the deal, or it might come later. So about Indian pipeline imports, going negative, selling to Bangladesh. I assume you rule out a pipeline being ever built from Turkmenistan in this period. That's been a project, decades in the making. Not much tangible progress so far.
Yeah, in our model, we do have that pipeline modeled, but I believe it looks pretty much like it is turned off in this particular scenario. If it, I think that there are still some major obstacles to getting that pipeline put in. But but you're right. It's a pretty big pipeline. So if that project were to actually happen, then it would change the character of the chart on the right for sure. So you may end up with more pipeline imports and lower level of LNG imports in the long run. So that's a good point, Joseph.
And if I could just briefly turn back to Japan, with all of these idle nuclear plants restarting, what kind of position does that put the LNG importers in? Do they have long-term contracts, which would, because they're stuck in these contracts, would it mean they would have to, resell the gas elsewhere in Asia?
Well, I haven't looked at the contracts recently, but when I last did, as I recall, most of those long-term contracts will be expiring over the next 5 to 10 years. And so I think that they're, from speakers from Japan that I've heard at various talks and so forth, they have more of a tendency now to make shorter contracts rather than long ones. And not to be quite in the position that you were describing, where they're actually long on LNG compared to what demand is. So I think they're more like thinking of short term and spot market rather than long term contracts for the future.
And zooming in on the near term, how sensitive will prices be to Asia demand?
Actually, very sensitive. I think if you look at this chart, we ran some scenarios where we looked at sort of what we consider to be the base expectation for demand in Asia versus a number of different scenarios. As you can see, base +4, +8, +12%, -4, -8, -12%. So a pretty big range of possibilities, almost more than ±10%. And you can see that the price levels for these different scenarios are way different. I mean, it's basically, about double or more, in fact. So yes, the overall price level in Japan, which is going to be also, I think, reflected in prices in Europe, is very sensitive to what actually does take place in Asia as far as demand for gas and LNG.
And how volatile is this price graph I'm looking at? If you compare it to price fluctuations in, let's say, the 10 years before COVID, before everything went a bit crazy.
Well, I don't have a chart that shows that, but prices in Asia have been all over the place, over the last 20 years. So
I see. Okay.
Yeah. So yeah, and of course the COVID thing, and then there's the Russian Ukraine war. Obviously they both have big impacts. To what extent those are based on emotion and expectations or fears. Fears of shortage of gas or whatever, you get those kinds of things happening. But this is not assuming any major change, actually, as far as either the Russian-Ukrainian war. It's kind of, this doesn't assume any, major strange or bad thing happening in Asia. This is strictly demand and different demand levels. Now, it does include all of Asia. Okay, so this is not just China, not just Japan. This also includes all of Southeast Asia and all of South Asia as well. So, I mean, it's a very large part of the world that we're talking about. But you can see that, I mean, it's likely that the actual price that happens over the next few years here is going to be somewhere in this range. And it's a pretty wide range, which means it's hard to predict. But anyway, that's what we are getting as far as price sensitivity to demand levels in Asia.
And what is the Asian perspective on the Biden administration's pause on LNG approvals? What is the long-term impact of US project delays on Asian buyers' strategies for trade?
Well, I think we have some charts later on in the presentation that talk a little bit about that. But I think the main effect is, the rest of the world, of course, would like to have as many options as possible. And so, where the Biden administration is essentially making it more difficult for new projects to get authorized for sale to the entire world, then that reduces the options that buyers have overseas. And so the overall tendency or overall effect of that is going to be, I think, twofold. Number one is it's going to put upward pressure on prices because there's going to be less available. But number two is it's going to make projects that originate outside of the United States more attractive because they're going to become more available. And there's at least a threat that these projects in the US, which are being delayed, may end up just losing out because it could be that buyers end up, choosing either to go with Qatar and some of its expansions, or Southeast Africa, or other places where the world is not sitting still while this pause in North America is going on. These other countries are going ahead, and believe me, they like it because these other projects are going to have a higher probability of going as long as the Biden administration is keeping U.S. projects from being able to move forward. So I think we have a chart later on that talks a little bit about more about that. But
okay, I mean, generally speaking, what are the challenges and opportunities for Asia and US LNG trade?
Still very good. I mean, the pause is, of course, what it is. And we've explained that, but if you look at the potential markets for U.S. LNG in Asia, you can see that those are growing quite a lot, and so I think that this is all very good. You can see that India is actually a really good market given its long-term growth. Really good market. And, interestingly enough, to get LNG to India from the United States, you don't go westward through the Panama Canal. You actually, the shortest distance is eastward, through the Suez Canal. And so you do have this other situation, which currently exists in the Red Sea, where it's not safe to send LNG tankers through the Red Sea. And therefore they're not moving through the Suez Canal. So in our model, we actually do model that chain or that hindrance, obstacle as occurring, but we assume that that is going to be resolved by the middle of next year. Okay, so that's an assumption. We don't have any, inside line into international sources that are going to tell us, but we just assume that it's going to be by mid next year that's resolved, and therefore in the longer run, Suez Canal becomes available for LNG traffic again. But the other thing is, South Asia is really big here, as you can see, but other Southeast Asia also ends up being, some pretty good markets for the U.S. So I think lots of opportunities in Asia. If you look at the right-hand chart, you can see the cumulative or the stack chart, and you can see it's sort of like India plus the others are about equal to India, if you will here. So yeah, quite a lot of opportunity there. And of course, I think the other thing that's very important here, it does relate to this pause, and that is the more LNG is available, the more LNG liquefaction and export projects that there are, the higher the supply capacity is, then that means the more competition and the lower the price should be. And the lower the price for LNG is around the world, that means the more countries could find it to be an alternative worth pursuing, worth buying. And that's very important because that means countries that have been building their economies, some of the developing countries that have been building their economies on coal, will be able to do replacement of gas for coal. And in spite of what some in the environmental community say, gas is much superior to coal. Even LNG is much superior to coal for power generation. This is the thing that we always are pushing at RBAC is the more LNG, the lower the cost, the bigger the market is going to be, and the better for all these developing countries, to use cleaner fuels in generation of electricity and development of their own industrial markets and so forth.
Mm-hmm. And you said we have slides on the impact of the Biden pause.
Yes. Thanks for mentioning that, Joseph. Yeah, we ran a scenario, and actually we reported this at a seminar in Singapore that we recently did, where we looked at, let's just suppose that these projects that are being affected by the pause, let's suppose that they end up just being canceled. Okay, mm-hmm. They just, because of the pause, they end up being late in the game. Other projects go ahead, but these get canceled. So this is sort of a worst case. And you can see in this particular chart, the blue solid line here is indicative of if the pause were not there, the buildup of capacity in the US. But if the pause is actually there, you can see, the stack chart on the columns would say what actually ends up being done, being built, and the actual capacity without those other projects. So you can see it's about 41 million tons per year lower, which is equivalent, by the way, to about 56, a little over 50 billion cubic meters of gas. Okay. So, and if you look at the next chart, then I can show you what the overall effect of that would be. So you can see on the left-hand side, this shows LNG exports. And again, you can see, Japan and China and Europe and so forth, all of these. And you can see it maxes out. Now we're changing units here. This is in billions of cubic meters, not tons, not millions of tons. But you can see the impact on the right-hand side. So the right-hand side shows the reduction. You see they're all negative, almost all negative. This shows the reduction in deliveries to various places around the world because of these cancellations. And you can see in the long run, we're talking about something that's more than 10% of total LNG supply gets lost as a result of this. So it's a very substantial portion. And of course, I don't have any charts that show the price impact of this, but because you have less LNG on the market, that means that overall prices are going to be higher around the world. And that means it's harder for developing countries to actually make commitments to LNG, which means in the end, there's probably going to be more coal is going to be used for making power and so forth. So overall, if you look at it from a perspective of the whole planet, I think it's a very negative effect.
Moving on, what is the impact of changes in the European gas supply structure on Asian portfolio buyers?
Well, it's kind of an interesting thing. We're in this kind of weird transition, in Europe because of the Russian war in Ukraine and a cutoff of so much gas that had previously been supplied by Russia into Europe, and Europe having to really change its operating basis enormously. while at the same time you have these environmental concerns that are trying to, and pretty successfully, to reduce the amount of gas production in Europe.
Mm-hmm.
At the same time that they're getting less pipeline imports. And so Europe, in order to just try to survive, basically has done this, of course, very quick buildup of LNG import capacity. And so you would expect, that maybe this would provide more markets for, let's say, any kind of an oversupply situation or an overcontracting situation in Asia, which I think is what you were referring to. Some of the Asian, both China and Japan, are talking about reselling or reloading some of the LNG that they don't need and sending it to energy-starved Europe. Well, it's sort of something that's happening to a degree. You can see the red chart here, or the red line, is showing the reduction in pipeline imports that occurred in 2022 and 2023, and actually probably also in 2024, by the way. And so you can see this is going down, 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 and then just kind of flattening out in the long run. And you can see the LNG imports, the purple line, going up, and you can see the production going down. So all of those factors. But this doesn't last, okay? So you can see the purple line peaks up around 2027 or so, and then it starts declining too. Well, why is that? Well, it's because of the blue line. You see, the blue line is the consumption. So this is based, of course, on the goals that the EU has established and in Europe, for reduction of fossil fuel use. So there's some built-in assumptions here about the ability of Europe to actually do this through renewables. I would say, certainly Northern Europe is not necessarily very well positioned geographically for solar energy. And I think the overall utility of wind energy is starting to come under a lot of scrutiny recently, the pluses and minuses of wind. Battery technology has improved a lot, but it is still, it's not long-term. It's very short-term. It's not like underground gas storage where you can put gas in, underground in the summertime and then withdraw it in the wintertime. So you don't have those kinds of things. So it's very iffy, really, I think, whether Europe can actually do what they're talking about doing. And by the way, this is very conservative. If you look at the consumption graph here compared to what the Europeans are targeting, this is more like slow reduction. This is not like immediate type reduction. So anyway, I think the final point is that if the Asian countries, if they end up over-contracting, I'm not sure that they're going to have all that much of a market to sell those additional cargoes into in Europe. However, if these are East Asia countries like China, mostly East Asia, and Japan, what they may do is they may find markets in South Asia and Southeast Asia. So I think that those are growing markets. And again, if the price is low enough, then you're going to have continued growth in Vietnam, Philippines, even in places like Indonesia and Malaysia, where their current gas supplies, Indonesia in particular, their current gas supplies are being played out, and they're becoming more importers than exporters. And then, of course, the whole South Asia continent, subcontinent. All of these are really potentially very big markets. And so I think that that's probably what would end up happening. It would stay in Asia rather than go to Europe.
I see. So in a nutshell, you're quite skeptical about the EU's expectation regarding how quickly gas and how greatly gas demand will go down.
Well, I think that they are being unrealistic, and I think, just based on the readings that I've done, not necessarily a bunch of scenario analysis here, but my readings, I think there are more and more um, people in Europe who are becoming more skeptical, you might say, of those possibilities. In the end, if you have to trade off energy security versus environmental goals, I think what we're seeing is that people will tend to want energy security and reliability. When they see that these are in conflict with environmental goals, I think they will go with security, and they won't sacrifice security and reliability largely for environmental goals. So I think that you're seeing more. Even IEA is I think becoming a bit more realistic about how these things may play out. But we don't know, and of course we don't know what advances might occur over the next decade or so that might make energy transition, more feasible. Nuclear is starting to get more traction again after several decades of, certainly in the United States it's not really happening, but it is happening in Asia. And even the Middle East, they're building nuclear. So, yeah, there's a lot of things that are going on, and still quite a lot of uncertainty, Joseph. That's one thing that keeps us going here, is the ability to model these different things and see what kind of interesting results might occur. It's not necessarily a prediction of exactly what is going to occur, but what you would like to do is to see, well, if this happens, then what would be the result, or what would be the impact, and maybe the side effects that nobody was thinking about. And so the ability to do some more planning around developing strategies that will handle different possibilities that might happen in the future. And that's what we're trying to do with RBAC, is to make those kind of tools available to companies and organizations so that they can operate their companies or their organizations in overall a better way.
Well, that seems very important in a very volatile energy market and a very volatile economy at present. Dr. Brooks, thank you very much for your insight. This has been the third installment of the Gas and LNG Insights podcast series, produced by NGW in partnership with RBAC. Thank you for tuning in, and see you next time.